Boom. On this beautiful Wednesday morning, the 28th of August. I like it, Rob. Let's go. Captain on the bridge. Guys, make sure if you ever spend any time over there in Traders Chat, jump over there and tell John Novak happy birthday. He turns 55 today. Just a pup. Just a pup. Guys, we're going to go through it today. We're going to have some fun. We're going to talk about patterns. And we're going to do what we do. And man, some great discussions in the room this morning already. Go back and read them. One of the things that you'll find is that anything that you go through as a new user, you're just going through what everybody else went through. One of the things about it, really anything when you learn to follow rules is learning the rules is rarely hard. Good morning, Steve. Morning, Erla, Ron. Learning the rules isn't difficult, guys. It never has been. Learning the rules is a pretty basic process. Following the rules, damn our egos, following the rules tends to be the challenge. So that's one of the reasons why practice is one of those things, right? Practice makes perfect, they say. But it's got to be perfect practice. You got to make sure that you're practicing the things that you want to do when it's real. Good morning, Izzy. Good to see you in here. So we're going to talk a lot about some very basic patterns that will pay huge dividends long run for you. Whoops. Didn't mean to do that. But before we do that, we're going to check news. Every morning I go to news, I check it out, I make sure that there's not a release that could mess up my day. The only news really going on, Ron, I missed your wake-up call, is at 10:30 a.m. we have crude oil inventories, which means that at 10:30 a.m. there's going to be a group of crude oil traders that may react to this news, which means that if you are also a crude oil trader, your best bet more often than not is to just go sit on your hands. What a great time to go fix a sandwich or walk away from the computer and not trade into that emotional reaction that is potential. We also look for these high impacts. So tomorrow morning we got some pretty good ones, 8:30 a.m. Medium impacts. All of these can change the market's direction, speed, everything. And just avoiding them tends to be the best of the best for people. So I dropped that link in the room. Then everything that I'm going to talk about, guys, and I'm telling you, it's the same stuff every day, which I think is pretty great because it means that we don't really have to overthink things. All we have to do is keep listening until it sticks. Yeah, Ron, that was definitely my phone. But everything I talk about is coming from the Nexgen page. Gone to great lengths to give you guys anything and everything that you need here. The first little tab here is the education. There's the trading guide, there's the software guide, and then obviously you guys have already pulled off join Discord. Nice job. But the software guide is your Ninja Trader how-to. And I think this stuff's important, guys, because there is some... is that it? No, there you go. There's your Ninja Trader how-to. Software User Guide Nexgen. This covers pretty much anything you could hope for with Ninja Trader. Whether it is building new charts, turning off those trade markers so that you can see where your entries and exits were. Guys, there is the Nexgen best practices, Ninja 8 best practices. I think it's funny that it gets you on fudge. The bot comes in for fudge. They know what you meant, Rob. And guys, these Ninja Trader best practices give you a couple things. One of the things they do, and I'm going to skip most of it until we get to right here. Really? Can you guys hear me now? How about now? I just did a little reboot. Did that help? No? Weird. Goodness. All right. A lot of time this little rebump gives us what we need. Um, so let me get back in here. Hopefully you guys can hear me. Usually you can still hear me, even though you can't see me yet. Do you guys have audio? It is today, Rob. Can you guys hear me? Give me a Y if you can hear me real quick. All right, cool. Jonathan's got me. So we're back. Jonathan, it might just be the two of us today. Can anyone else hear me? Give me a Y. If not, then we got to figure something out. Yep, okay. Cool. So if you can't hear me, reboot. There we go. We're going to put it on them. Nobody else can hear me, huh? Is it just two of you? Or is the rest of the people just ignoring me? Okay, there we go. Troy's in. No sound for you. All right. One second. So I'm going to disconnect. Ron, you've got me? You can hear me, Joel? All back good? Okay, we're good. Thanks, guys. All right, cool. So here we go. Guys, this is one of the things, I was talking to Rob about this morning. One of his best practices, Ninja Trader, every morning, this is a part of my daily routine, is coming through and just cleaning out yesterday's data, getting rid of the old data, anything that might be corrupted, and it's not hard to do. I just gave the instructions. But guys, from documents, there's Ninja Trader 8, and I'm not going to take the pictures and post them. There is a database folder straight from Ninja Trader 8. Inside the database folder, there is cache and tick. I delete these every day. And what it does is it helps me start fresh. And then I go right back to Ninja Trader 8 and I go to my workspaces. And I delete my recovery. And what that does is it takes out whatever data might be harmful. And then I go to my temp folder, TMP, and I get rid of anything and everything in here. And guys, I do this every morning. This is part of my morning routine. So I dropped the instructions in there, but those are kind of the things that keep Ninja running a little smoother. If there's a piece of corrupt data, we can get rid of it. That's what I wanted to share on here. And there's the instructions, and it talks through everything, making sure every day, right, Ron? And then the trading guide is where all the answers come from. And man, one thing that I say every day, and I mean it, is I don't keep secrets from you. I don't want to keep secrets from you guys. We're better than that. We've been through too much. I am going to give you the path of least resistance. I'm going to keep you focused on the best of the best. And guys, there's a couple lessons that you have to learn. And if you skip the lessons, you're going to struggle. I'm just telling you right now from experience, 4.5 years of teaching this software, and the people that try to get to the money before they understand the process spin their wheels, and they spin them a lot, and they get frustrated and they get angry, and then they focus more on the money and less on the process. So I'm going to encourage you guys, especially my new users in here, focus on the very basics, and then those basics are going to carry you next level, guys. So from the trading guide, the one thing that I talk about every day is the high probability trend trade. Like a broken freaking record, every morning we talk about the high probability trend trade. And I do it for some very specific reasons, guys. One, it's the easiest trade to teach, I think. Two, this is a trade that typically wins 70 to 80% of the time. Three, I love three. Guys, this is the trade that creates confidence through that memory of success. And if you've ever done anything in your life, when you feel up against the wall, when you feel stressed, you don't perform like you want to, but when you feel confident, when you believe in what it is you're doing, guys, you go after it aggressively, and it's almost hard to get you to break your rules because you believe in those rules, you trust those rules. Um, and then this is the trade that teaches you to read your charts. And most people don't believe this. I'm not teaching you to be day traders, ladies and gentlemen. I'm not teaching you anything more than to recognize advantages. And then it's from those advantages that you'll become a trader. But you're a chart reader first. And chart reading is about 90% of your day. It's 90%. It is a lot of sitting on your hands. We are more like professional waiters than we are professional traders, guys. 10% of your day will be taking a few basic advantages and turning them into trades. But you will understand once you get to the point to where you can read your indicators, if you don't bypass these lessons, you're going to understand where the market is likely to continue. Initially, this is your entry for the highest probability trend trade. You're going to understand where the market is likely to go. You're going to be able to use these key Fibonacci areas and say, you know what? I should probably get paid at a line. And then you're going to understand where the market is likely to stop, guys. And these likely to stop areas can end the trend. These likely to stop areas can create big untradeable bounces. These likely to stop areas are what we call termination conditions. And I put a picture in the room today, and we'll study termination conditions. This is the most broken rule. This is the biggest problem for new users. So maybe if you go into the education process and you believe it, guys, over this course, this was probably 6 or 7 hours in crude oil. Lines on your chart stop the market cold 7 times. 7 times the line stopped it. 2 times the lines broke. And oddly enough, this was an opportunity for Nexgen users to make money. That was an opportunity, and that was an opportunity. So 90% of your day is doing nothing. 10% of your day. What do you mean pick, Rob? Can you not see? 10% of your day will be focusing on turning those advantages into a trade. Can you guys see my screen? Give me a Y if you can see my screen, ladies and gentlemen. Rob, it may be on your end. Try rebooting. So this high probability trend trade has 3 rules. That's it. 3 rules. Each rule gives an advantage. So on rule number 1, it says that the large chart must have strong trigger lines. If this rule is true, if it's met, guys, you have the advantage of momentum down here in yellow. Rule number 2 says no termination conditions. Room to your profit targets are true. And guys, that means that you're not trading into one of those lines, which means that you'll have a clear path. You have room to make money. That's the goal, to make money, guys. Nobody's ever started a road trip with a brick wall 2 feet in front of them, right? We get to the other side of that wall and then we get going. And then finally, we're going to enter through rule number 3, and that's going to define where the market is most likely to continue. So I'm going to say it really, really clearly, just for a second. Guys, once you can define momentum, and once you can establish that you do in fact have a clear path, you're going to find an infinite number of ways to make money with this software. But in the beginning, this trade is designed to get you focused on the 2 most important advantages, and then how to enter with the highest probability of success, with the least amount of risk. And that's what we focus on for a whole hour, sometimes an hour and a half if you guys ask good questions. These 3 rules, happen on only 2 charts. And you're going to see people in this room with more charts. If you go over to Traders Chat, you're going to see people with like 5 charts. Guys, more is not better. More markets, more screens, more charts, more rules. More is not better when you're brand new. Simplicity is what's going to pay dividends. So we're going to use a large chart, and the large chart's going to lead the way. The large chart's going to be the only thing that I look at in the beginning. Before I ever decide to enter, my large chart has to do its job. My large chart on the most current bar, the bar that has the active price going up and down, is going to define the direction of the market. It's going to tell me which way I should be looking for my rules to be met. And it's pretty simple. If the background is green, the market is going up, I'm going to look for trades that are long, that are going with that trend. If the background is red, well, then it's going down, and I'm looking for rules to be met for that high probability trend trade short. I'm just going to go with the flow. Life is easy like that. Then it's going to define the momentum through rule number 1. It's going to let me know if I have strong trigger lines. And if it does, then I'm going to make sure that I haven't reached one of those key areas. I'm going to make sure that I got room to get paid. And that's where rule number 2 comes in. I don't even look at a smaller chart. I don't look at a faster chart. There's actually a gentleman that posts in this room. He says that he doesn't even keep his small chart up where he can see it. He watches his large chart, insists on his rules being met, and then he'll go look for an entry. And guys, I think that is a wonderful plan. Your small chart is going to take an x-ray of that one bar on the large chart. This is a smaller, faster chart. If the large chart is a very broad stroke of a brush, then your small chart is nothing more than a refinement tool, guys, and it's going to pinpoint exactly where the market is most likely to continue. This becomes your entry for the highest probability trend trade, guys. By using this smaller, faster chart, by taking 20 to 30 bars inside of this one bar, giving me all the information that I need, I'm going to be able to reduce my risk dramatically. I'm going to be able to increase my profit potential. And rule number 3 is designed to do nothing more than put you into the market where it is most likely to continue with the direction, where it is most likely to continue with the momentum, and where it's most likely to go with that clear path. So it's only 2 charts, and it's only 3 rules. And I think this is one of the most important pictures for new users. Who are you trading with, or who are you trading against? There are forces in the market, and I'm going to tell you right now, you will never be a force in the market. Well, maybe you will one day, trading thousands and billions of dollars, but right now, you're not close to either of these forces. There is a large crowd, and that's what your large chart represents. These are the people that wake up and say, you know what, I think I want the market to go up today, and sure as heck, the market goes up. And they're like, hey, I think I'm going to establish a little momentum. And they create the momentum. And they're like, you know what, I see that Fibonacci resistance in the distance. I think I'm going to exit my position and let the sellers take over up there. And guys, the large crowd is making the decisions at these key areas. They're establishing trends and momentum, and there's just no reason to fight them. Good morning, Kenan. And one of the biggest problems that new users make is they feel like they have to be first. They feel like they have to be the first one in and the last one out to ever be successful as a trader, but it's just so not true. Because for every large crowd, there's a small crowd. This is your small chart. And when these guys get it cranking one direction, there's a group of people that have enough money to create these little pullbacks, these little pushes against them. And these guys fail 70 to 80% of the time, which means that when we can pinpoint through the high probability trend trade exactly where their failure is most likely to happen, we put ourselves in a position to trade with the large chart from the point where the small crowd fails. And this is where rule number 3 pinpoints that entry. This is where the precision comes in, where the risk gets decreased dramatically. So we're going to keep it real simple, guys. We're going to talk about 3 rules. You guys are going to learn the rules for when it's okay to trade. I'm going to break them down individually. We are going to look at not trades, but rather individual advantages that form a trade. As I go through all of these, I encourage you, if you're brand new, raise your hand and ask a question. If something doesn't make sense, your little avatar pictures they're not moving. I don't know if you're confused. But the class is designed to be a discussion, so don't be afraid to post in this room. You guys can simulate, practice, get out there, and don't just practice taking trades. Practice scaling your charts and entering trades and moving your stops and doing all those things that you want to get the mechanics down on, guys. Become familiar with your tools. But when you take trades, the goal is going to be a couple different things. First, I want you practicing the rules best you can. because we're setting ourselves up for long-term success by practicing the way that we want to play. When you just practice the wrong trades, when you just jump in to see what happens, when you fight trends because it's only sim, you're teaching your body that it's okay, because every winner that happens without advantages, your brain goes, this is it, this is what we have to do. And then you start trading into lines and fighting momentum. So simulate practice, but get them in the room. And that's really the first step in becoming a confident trader, guys. And this is the path of least resistance that I talked about. This is the same path that was put in front of me when I started with the software 4.5, almost 5 years ago. And this is the path that I fought tooth and nail, because it felt like a lot of work, because I was embarrassed that I didn't know how to do what these people that had had software for years were doing. I was embarrassed that I would lose, and I didn't want to participate, guys. I'm going to tell you that right now. And it cost me a lot of money. Cost me a lot of money, and a lot of money fast. So to get to where you want to be, post in the room. While you're on simulator, everything that you do, make sure that it gets into the room. And don't just post and say, hey, Mark, what do you see? Doesn't matter what I see. I have to know what you see. So I want you to go back to those 3 concepts on every chart that you present. I want you to talk about the momentum. I want you to talk about the path, whether you think it is clear or not. And it's okay to be wrong. And then show me where you entered and show me where you exited. And if you do this every time, if you tell me what your chart read is, if you tell me why you did what you did, if there's a concept that you need a little help on, I'm going to see it instantly, and I'm going to know because you told me, hey, I had a clear path, when in fact you traded into an area that could stop the market. We'll revisit termination conditions. We'll talk about momentum. We'll do whatever we need to do to make sure that your chart reads are accurate. So it's really important, guys. Make sure that you give me those 3 concepts on every chart. Avoid the temptation to write things like ugh, or this sucked, or they got me. Who cares? We're going to focus on rules, guys, because rules have been proven to win more than they lose. The second thing, and the way to slow the market down, because the market seems overwhelmingly fast to a lot of people in the beginning, it did to me, is to use a spreadsheet. I give you one every day. I give you mine every day. Some days I fill it up, some days I don't. But there's a lot of information on this spreadsheet. Let me drop mine in the room right now. It has 4 tabs. The first tab is nothing more than a trade journal for you guys. One of the best things you can do is take a lot of pictures. And I mean take a lot of pictures. In the last 2.5 days, I've probably taken 120, 130 pictures. Because I'm studying new concepts. I'm working with my brother on new patterns, different stuff. So I take a picture of everything. I take a picture before the trade to make sure that my rules are met. I take picture when I enter to make sure nothing changed. I'll take a picture halfway through so that I can come back and study it for management. And I'll take a picture of the completed trade. And guys, for you in the room, show me the completed trade. Show me from enter to exit. People love to show me their limit orders waiting. Guys, show me the whole trade. Let's see what happened. Let's see if anything changed. Let's see if there's a better way to do it. And then you're going to put it into your spreadsheet every day. Everything that you do goes into the spreadsheet. And the reason you do that is because if you really want to get to where you want to be fast, come back and study it tomorrow. Wake up, pour a cup of coffee, and look at what you did yesterday. And ask yourself what worked and what didn't work, and what felt forced and what felt easy. And what you're doing is you're creating this recognition of the things that are making you comfortable, the things that are bringing you success. And you start every day with this focus. Man, I'm going to do that today because that worked great yesterday. And then you're going to look at what didn't work. And the cool thing is you're going to say, wait a minute, I probably need to avoid this. Trading into those lines didn't serve me well yesterday. Jumping into the market arbitrarily didn't serve me well yesterday. Let me focus on what's bringing me success. And guys, that's what the first page is for. Make sure you study it. The second tab is just the rules broken down individually for the high probability trend trade. So if you're brand new with me, like Dunk, Andrea, Josh, guys, you can go through. I've already given you 47 pictures of what it means to have strong triggers. Commit them to memory. I've given you, well, I don't know, I guess just 15 pictures of what it means to have a clear path. Commit it to memory. Commit the rules with the looks. Same thing with the entries. And then I think it's important, and I could be mistaken here. I'm wrong a lot. But I think that if it's important to understand strength, it's equally important to know what weakness looks like, so you know when your rules are not met. And if it's important to know what a clear path is, it's just as important to understand what a termination condition looks like so you don't trade into them. So this second tab has both sides of the coin for each rule. You'll create your trading plan here. That's what this is. Every time you take a trade here that is like 32 flavors of awesome and it's everything that you're looking for and all the rules met, it should go into your favorite looks because you want to repeat that. These are the ones that you're going to come study to make sure that you commit these looks to memory. And then finally, there's the client trades, guys, and this has everything under the sun. This is a high probability trend trade sequence for shorts and longs. This is almost 400 pictures of you guys using the software and using it well, whether it's a high probability trend trade, sometimes it's a medium probability trend trade, but what it does is each and every one of these pictures revolves around very identifiable advantages. And you're going to see that absolutely it's not just me handpicking pictures for you. These are the pictures of real Nexgen users posting in this room. If you're trying to be a NASDAQ trader, guys, if you're not good at reading your indicators, you're probably going to lose more than you win. NASDAQ moves about 5 times faster than any other market, and it is very erratic, and there's different sets of rules for entry. There's a whole section dedicated to management and patterns and termination conditions, guys, and I just dropped this in the room, and this is available for you. Use it. Take pictures. I tell people commit to 15 pictures a day. If you do that, 15 pictures a day is 300 pictures a month, guys. It's tough to not get good at something if you just continually take pictures and talk about why it's important to you. So we're going to simplify. We're going to talk about that first trade. It's going to open the door for a second trade. I'm going to give you a rock solid plan that's designed to optimize your chances of success for 2 trades. You have to know what looks you're going to commit to, guys. That's where the spreadsheet comes in. That's where using the camera comes in. And here's one thing too. Let me do this. If you're not comfortable taking pictures, if you're not sure how to take pictures, then I'm gonna put the burden on you. I need you to raise your hand in this room and say, hey, Mark, will you go through the capture software? And there's the how-to right there. And guys, everybody's got capture software. When you download the software for Nexgen, it's right there. Doug, just type in the room, brother. I know people have there's an invite to speak, a request to speak thing. I have never in the history of this room given anybody the microphone. So just type in the room. If you have a question, drop it right in there. If I gave up the microphone, it would be chaos. But all that's in here, guys, and screen capture software is pretty easy to use. You just got to practice it a couple times. And if you need help, all you have to do is ask. We will create a session. So let's get to rules. Why? Because these rules have been proven to win more than they lose. Which means that if these rules were a coin flip, you would have an advantage. You would have an edge that says, hey, 80% of the time it's going to land on heads. Why would you ever bet on tails? And everything starts on the large chart, guys. Strong triggers. Strong triggers give us momentum. And the only way you can have strong triggers is to trade with the trend. Green is up, red is down. Because in order to have strong triggers in an uptrend, your small triggers, these solid lines, and your large triggers, these dashed lines, that's as in-depth as I get on the trigger lines. There has to be a separation between them, and they have to be green. The colors must match. The background, the large triggers, the small triggers. When the small triggers break above the large triggers, when both sets are wide and angled in the direction of the trend, it's this space between the two that lets me know that the odds are favorable for the market to continue up. And when the background is red, when the small triggers break below the large, when they're both wide, angled in the direction of the trend, that space between the two lets me know that the odds are favorable for the market to continue down. Strong triggers, you're going to hear odds favorable momentum in this room all day long. You're going to see charts annotated with OFM, and that's exactly what it means. It means that there's strength. I want you to picture scissors that are open. And guys, as long as scissors are open, you can cut. You can get work done. And then once those scissors close, when your small triggers return to and enter the large triggers, this is a weakening of the large triggers, guys. And when we weaken large triggers, it's right there in the word, anything can happen up or down. So there's two sides, right? There is strength and there is weakness. As a brand new user, your job is to commit to strength, because when you have strength, the market's likely to continue in the direction of the trend. When you have strength, it gives the market the potential to break those key Fibonacci areas. And when you have strength, God bless it, it will cover some of the mistakes that we tend to make as new users. So strong triggers, guys, it's probably the shortest lesson that I'm ever going to give. Strength all the way up to that red line. Strength all the way down to that blue line. Strength all the way down to that blue line, guys. And then there's weakness, and look at the bounce. Let's see if we can find more weakness. Weakness right at a fib. A fib's more likely to hold. Weakness, and the market reverses right from the middle of nowhere. So is everybody good? Will you give me a Y in the room if you feel pretty comfortable? You know what? Strength, weakness. Rule number one, guys. It's rule number one for a reason. There are people in this room that trade solely on momentum and a clear path. And that's the first part of it. And you're going to see some pretty cool trades in this room where momentum and a clear path are like the total basis. But once I have momentum, once the large chart says up or down, once the large chart has strength, I have to make sure that there's nothing in the way. I've got to make sure that I don't have what we call a termination condition, because if it's there, I won't have room to my profit targets. And if I don't have room to my profit targets, guys, that is not a clear path. This is a dead end, or at least it has the potential to be. Large chart, horizontal lines can stop the market. I don't want you to worry about what creates the lines right now. I don't want you to worry about the math that goes into it. I want you to know that if you get a horizontal line on your large chart, it has the potential to stop the market. This picture gives them all a name. So divergence high lines, it's a magenta line, fancy way of saying pink. And guys, it'll print if there's a loss of momentum right at this pivot. And it doesn't even print till like 3 bars down. So it's not important until the market reaches it later. There's divergence low lines, same thing. If the market goes down and up and momentum doesn't follow price, guys, this blue line is going to print, and it becomes a line in the sand that you'll be able to recognize long before you reach it. We have Fibonacci resistance, these red lines. Resistance, when the market is trending up, this is the point where the market may stop, where it may bounce, or where it may reverse completely. You'll know about these areas long before you ever get to them, guys. And support is the same thing. When the market is trending down, the market may stop, bounce, or reverse completely off of this line. Then we have yellow 1-to-1s. These are like fibs in the moment. These print live all day. And if the market's trending up, they'll behave as resistance. And if the market's trending down to them, they'll behave as support. And each and every one of these lines has the exact same value. Each and every one of these lines is equally important. So I would encourage you, I dropped the picture in the room. This is nothing more than a roadmap. It has nothing to do with rules. It has nothing to do with trades, entries, exits. All it is lines that may stop the market. And there's a pretty simple recipe to know when they have that potential, guys. And everything begins with price reaching the area. Whether it is resistance or support, whether it's a divergence line or 1-to-1s, a fib, price bars reach the area. And the reason price must reach the area is because your large crowd is making decisions at these lines, guys. People may enter the market, people may exit the market, fights can happen at this market. But the one thing that we know, and this is how you identify a termination condition, when price reaches the area, I want you to ask yourself, where are my triggers? Where are those same triggers that created momentum for me? If they remain below resistance, if they remain above support, these are areas that may stop the market. Guys, this is like a brick wall. It's not a clear path. And I'm going to tell you, every line that you reach will be a termination condition, at least in the moment, which is one of the reasons why getting paid at these lines is so important. If you're in a short position and you get to support, you don't know if it's going to hold or break. What a great place to take profits. And then you sit on your hands and you wait for the reaction. And it's either going to stop the market and reverse it. If it does, we're going to call it a strong top or a strong bottom, or it's going to break, guys. And an area is not broken until the small and large triggers get to the other side of it. An area is it's not in the rear view mirror until both the small triggers and the large triggers get to the other side. Guys, this is your highest probability scenario. Support is either going to be a termination condition, or it's going to ultimately be a clear path and behave as resistance. And resistance will behave as support when the path is clear. So as a brand new user, all you need to do, let's go to our large chart. And this is pretty amazing, isn't it? Price reached Fibonacci support, and the triggers didn't get below support. Can you give me a Y if you see it? And that blue line that you knew about since 7:31 a.m. yesterday, or today, that's today. Stop the market cold. Price reaches support and it happens again. Support with weak triggers directly into resistance. Resistance stops the market. Divergence low. Holy smokes. Resistance, resistance, resistance. Guys, you know where these areas are. The easy money is made in between areas. The easy money is trading away from fibs, not into fibs. So rule number 2, it's either broken or it's not, guys. You either have a clear path or it's behaving as a termination condition. Can you give me a Y in the room if you're with me? The most basic form to keep you safe in the beginning is if price reaches the line and the triggers remain below or above, do nothing. Wait for the reaction. But the easiest way to learn to trust this, guys, isn't to take a trade. It's to go back and look at your large chart and see how many times these fibs stop the market in its tracks. How many times these divergence lows impede forward progress. And what happens is you start saying to yourself, wait a minute, maybe, just maybe, I shouldn't trade into support with weak triggers. Maybe without momentum, trading into resistance is the wrong path. And guys, all you're doing is you're establishing advantages. Like I said, every line's going to be a termination condition for a minute. And then you wait for the reaction. If the small and large get below it, it's broken. And then guys, that's going to take you to your second trade. Your ability to recognize momentum is going to take you to the second trade. Your understanding that no triggers through means no trade is going to take you to your next trade. And that's what we call a 50-50 trade. And I want you to see something. Take a picture of a picture, right? A 50-50 trade has nothing to do with your chance of survival. It means that 50% of your triggers, the small, have gotten below support, smashed through support. It also means that 50% of your triggers have not, which means that the path isn't clear. So the 50-50 look, and it's just the look, says that with odds favorable momentum, that's one word. This is why we just go with odds favorable momentum. This area has the potential to break. Guys, potential is not broken Potential is not a clear path. So if I don't have rule 2 met, it can't be high probability trend trade. And I say this because it means that you've got to put your management hat on. You've got to rely on your chart reading in case something changes and you need to manage aggressively. But this 50-50 look, guys, you're going to find that the majority of your trades are in fact medium probability trades where one of those advantages is gone. But get really good at the first two so that one becomes easy to recognize. One of the biggest challenges for new users is they hit a line and they're like, oh man, I've got to sit still. And they hyper focus on this line. And the small and the large get above it and they're so excited that they don't realize that it hit the next line. Guys, clear paths are only clear until you reach the next area. Then the process starts over. Then we go right back to termination condition. And this is that 90%, guys, because you might hit support and then you hit another level of support. And then you hit another level of support. And you're like, son of a gun, I can't get a break. And guys, this triple whammy happened in like 2.5 minutes. It's really not that bad. But 90% of your day is waiting for those advantages so that you can capitalize on them. And the futures markets trades billions of dollars every day. You only have to catch a little piece of it. And we coined a new phrase this morning. Everybody's heard of the fear of missing out, right? You're afraid that you're not going to get yours. Guys, there's a feeling of being left out among traders. We saw it in crude oil this morning. Crude oil just tanked, FOLO. And there wasn't an opportunity to get in. And Rob, you were a little dejected about it. You were a little upset. Well, I guess I can't do this. My rules aren't met, which is perfect. Just because your rules aren't met doesn't mean the market can't do whatever it wants to do. But your rules are designed, guys, 100%. Your rules are based off of thousands of pictures, countless hours of study, back testing, pattern checking, and they have been proven to win more than they lose, which is why we are so willing to sit on our hands and do nothing when the rules aren't met, because we forfeit the advantage. So rule number 2 is going to help keep you out of consolidation. Rule number 2 is going to keep you out of chop. Rule number 2 isn't only going to tell you where the market is most likely to stop, but if you're in a short position, your understanding that these lines can stop the market cold creates beautiful, beautiful targets. And guys, that's large chart. Large chart lines can ruin the fun. They can take away your advantage of a clear path. But once you do have a clear path, once the momentum is amazing and the path is clear, guys, you're going to turn to your small chart and look for entries. You're going to let that small crowd do their thing. There is one time on a small chart where I will say it's a termination condition. There is only one time on a small chart where I will say when the rules are met for the large chart, momentum in a clear path, that I absolutely positively will not take that short or take that long, and that's 3 divergences. 3 divergences in the same price range. And these 3 divergences are nothing more than 3 losses of momentum, but the small chart, because there's 20 to 30 bars in each one of those large bars, the small chart's going to show me change that I can't see on the large chart in time, guys. So 3 divergences can be an absolute killer. And it doesn't mean that the trend is over forever, but it means that there may be a bigger push, guys. And 3 divergences with weak triggers, that rule number 1 lesson makes it even more powerful. And then there's even these head and shoulders. If the final pivot is higher than the previous, guys, this says not only can the sellers not push down and match their price, but they just lost momentum again. So 3 divergences in the same price range. This will ruin your fun, guys. Are we good? We're done with the large chart. How easy was that? We are already done with the large chart, guys. It has defined the direction of the market. It has defined the momentum of the market. And it has told us whether or not we've reached an area that could suck the life right out of our trade. So once the large chart does its job, let's go refine that one bar. Let's go turn it into an entry, guys. And rule number 3 is going to give you such a level of precision that you will be able to use a limit order. I mean, you'll literally wait for the market to come to you, and you're going to wait at an area. Fibs, midbands, yellow 1-to-1s. On the large chart, areas can stop the market. We need them to clear. On the small chart, areas inside of triggers are where we expect the small crowd to fail. This is where we're expecting the bounce, guys. And you're going to pinpoint your entry. You're going to use a limit order to buy or sell a pullback. And that means that little push by the small crowd. And you're going to have that limit order waiting at areas inside of what I call favorable large triggers. The rule says inside of triggers. And that's a little more advanced. Inside of favorable large triggers gives you the highest chance of success. It gives you the best of the best, guys. The one thing that I know to be true, I've watched it a million times, I've studied it, is that price returns to large triggers. It does it on the large chart, it does it on the small chart, it does it on a range chart, it does it on a week chart, a month chart, a stock chart, a futures chart. But price returns to these moving averages, these large, slow moving averages. So what we've done to give you the highest chance of success, the least amount of risk, the highest level of accuracy, is we have taken the large triggers from your large chart and superimposed them on the small chart. So I've got what's called synthetic triggers, these stepped, and these are just your large chart, large triggers. And I've got the other large triggers, the smooth ones, and these are just the 5-1 large triggers. And when they overlap, when they're one on top of the other, what happens is you've taken the correction point where price is likely to return from 2 separate time frames, and they've created one little area, one small spot. And then when you put fibs, midbands, or yellow 1-to-1s inside of what we call these favorable large triggers, picture 2 snakes riding piggyback, you're going to have the least amount of risk, and you're going to have the highest level of accuracy when the large and synthetic overlap. And when they split, your accuracy goes away. Your risk gets elevated. So brand new users, overlapping is your best case scenario, favorable large triggers. And it doesn't matter if the line is in the synthetic or the large. When they're right on top of each other, this is the easiest entry, the lowest risk entry, the highest probability entry. The more they separate, the more indecision, right? Is it going to be these 1-to-1s inside of triggers? Is it going to be this mid band? I don't know. The indecision is there. So focus on those favorables initially. And then what happens is with repetition, with some practice, getting a little feedback, you'll create a plan to be able to capitalize on this. But remember that this class is designed to give you the easiest of the easy initially, the highest probability to build that confidence. So how do we pinpoint where we have to enter? Guys, it's a 3 or 4 step process, and you're going to have to practice this one. First thing is that the large chart rules are met. You know what? Let's take it from the spreadsheet real quick. Let's do one from the spreadsheet. And we'll go through it individually. So rule number 1, is that big enough on y'all's chart, or should I go bigger? Rule number 1 is that the rules are met, right? The first thing you have to do is make sure that you have odds favorable momentum. And then you have to make sure that your triggers are below the areas that you haven't reached the next. Can you guys give me a Y in the room if you see that the large chart has rules met, that it is in fact time to go to the small chart and look for an entry? Awesome, because this is the biggest one, guys. So on the small chart, we're going to let the small crowd fight. That begins with a reversal bar. And guys, what I'm showing you right now is on that spreadsheet that I gave you. Once this reversal bar prints, it signals the beginning of a pullback. This is not your entry. This is not where we're going to enter the market. We're not going to hit sell now. Once we get the reversal bar, the next step is to identify our triggers, hopefully our favorable large triggers. And what I've done here is I've drawn a box from the bottom to the top, from the lowest line of the trigger lines to the highest line of the trigger lines. And this box, this green shaded box, is where I expect price to return. The trigger lines are not my entry. Otherwise, I would be in right on this reversal bar. This shows me where I need to find areas, where I need to look for fibs, mid-bands, and yellow 1-to-1s. And guys, that's where we create what we call the window of opportunity. This is where we create the point where we can identify that the market is most likely to continue with momentum and clear path. So we're going to look for resistance inside of favorable large triggers. We're going to look for red Fibonacci, magenta midbands, and yellow 1-to-1s. Your window of opportunity, the place where the market is most likely to continue, will extend from the lowest point of resistance to the highest point of resistance, from the closest point of resistance to the furthest point of resistance. And this white shaded box right here, guys, this is where the market is most likely to continue. This is where the small crowd is most likely to fail. This is where we expect the bounce to go with the overall trend of the market. Here's the part that takes courage. You're going to activate a limit order. 1 to 2 ticks below that lowest point of resistance. You're literally going to wait for the market to come to you. Notice that the reversal bar is still there, right? Nothing else has happened. Sometimes this process takes 3 to 4 minutes. Sometimes it takes 5 to 6 seconds, guys. This is why we're learning the pattern. Because the pattern, when you know it with nothing moving, it makes it easier to catch it when the market is. I've activated my limit order, and now it's time to pray. I sure hope the small crowd can push up. I sure hope they can fight momentum. I am rooting for the small crowd to get to my area. What do you mean not at the bounce point? Not on the fib, Rob, but rather 2 ticks below? Absolutely. Why? Look at this chart. This chart, Rob, is flying to the downside. This chart is screaming south with absolutely nothing in the way. This chart is a pissed off bull going after a red flag, right? How much do you expect the small crowd to be able to do against them on this tiny little chart? So we go a couple ticks below. One of the things is we got to not trip over pennies trying to save a couple dollars, guys. So a tick or two below the lowest point of resistance. And if the small crowd has it in them and they hit your entry, guys, you're in a short trade with odds favorable momentum. You're in a short trade with absolutely nothing in the way on the large chart, and you're in a short trade at the point where the market is most likely to continue. And guys, this becomes your entry for the highest probability trend trade. This is the best of the best. You're going to give me 20 days focused first on identifying odds favorable momentum and making sure that you understand the idea of a clear path. And when these rules are met, you're going to go to a smaller, faster chart. And you're going to wait for a reversal bar. And the reversal bar is not your entry. The reversal bar says, hey, guess what? Here comes the pullback. What do you say we find some trigger lines? And once you find the trigger lines, you know where the market should return to. You know where those price bars should come back to. Whether it's at the very highest point or the lowest point, you'll never know. But once you define the trigger lines, you're going to say, guess what? I need something solid for that market to bounce off of. I need a fib, a midband, or a yellow 1-to-1. And my window of opportunity, the point where the small crowd is most likely to fail, lies somewhere between my highest point of support and my lowest point of support inside of triggers. And I'm just going to activate a limit order, guys. A tick or two above, and I'm just going to hope. I'm going to hope that the small crowd has them in them. And guys, that's the entire process for pinpointing entries. And I always encourage you guys, give it 20 days. Give it 20 days to find your entries, because once you can find your entries, you know where the market shouldn't go. Once you identify that window, once you understand that it needs to be inside of triggers, you understand that price comes back to the triggers, but it bounces off of areas, you're going to understand that 4 or 5 ticks on the other side of those trigger lines is where the market shouldn't go, where your advantage is gone, where the edge is no longer present. Because once we get to the other side of those triggers, nobody knows where it's going to stop. It's already gone past the best of the best. So your first stop placement is 4 or 5 ticks beyond the triggers, guys. And this is where you have to say to yourself, if the small crowd can blow through all those things likely to cause a bounce, I'm going to exit this trade. And you will lose trades. You will take losers. You're going to lose 20 to 30% of every high probability trend trade you take. It's a normal part of a positive equity curve. It's not a failure, right? It's not a reason to get upset. It's no reason to think the market hates you or the software sucks. As long as you entered with the advantages, you had a statistical advantage. You had a trade that wins more than it loses. And guys, I'm telling you right now, you will take losers. And I'm so confident in this methodology that I'm willing to take the losers, that I force them to come get me. And guys, this was presented in class. Odds favorable, clear path. Rob, did you hear me when I said that once it gets to the wrong side of these triggers, I don't know where it's going to stop? Lines or no lines, I don't know where it's going to stop. So my advantage is gone. So any line outside of those triggers, Rob, any line beyond those triggers is not a part of my equation. Not for the high probability trend trade. It can't be a high probability trend trade. They're not inside of triggers. And guys, I see people get run over here all the time. All the time. That's why your first stop placement is 4 to 5 ticks beyond those triggers, guys. And new users are so inclined, well, if I put my stop all the way down here, 20 ticks past those triggers, they'll never get me. And guys, that's like a surefire way to make sure that they get you. And all you did is you created a bigger loser than was necessary. And the cool thing is I'm going to give you a plan that really focuses on getting into the market. And it revolves around getting into the market. And once you're in the market, and you know where it's likely to continue, guys, and you put your first stop in place, the cool thing is that if you get a reversal bar in the direction of your trend, guys, you can reduce your risk 2 ticks above it. We've all been there, Rob. And the cool thing is on the plan that I give you, with all of these advantages, with this perfect entry, I'm giving you a plan with the closest, easiest to hit targets you have ever seen in your life. The first one's only $100 in the distance, guys. The second one's only $200. And the idea for brand new users is that you pick the right entry because it makes it easy to hit targets. And then in the same plan, it's going to tell you go break even when the targets are hit. Get used to getting paid as a brand new user, and your second target's only $200 in the distance. And I'm about to hand you a plan that says, without question, these are your rules for entry, this is your plan for management, commit to it for 30 days and learn how to read the software. Commit to it for 30 days so that you can learn to identify momentum, so that you have a good understanding of the clear path, so that you can pinpoint your entry for the highest probability trend trade. And I'm going to tell you one more time that once you can find momentum in a clear path, once that's in your wheelhouse, you're going to find a million opportunities, guys. But you've got to be able to find the high probability trend trade first. So I'm going to ask, are there any questions about the high probability trend trade? Are there any questions about the individual concepts of strong triggers, of a clear path, of an entry? If you're brand new, it's going to take a little study before it's really solid. But now it's your job. My job's done. I gave you the rules. I'm going to give you everything you need to study them. I'm going to give you a rock solid plan. Your job is to ask questions. The easiest way to get these looks, guys, is go take pictures. 25 pictures of strong and weak. 25 pictures of clear and terminations. Commit them to memory. But don't just commit the picture, guys. You have to talk about the whys. So, Rob, this is your homework. Go take 10 pictures today of price reaching an area and the trigger lines below. Yeah, they're setting up, right? Setting up, Pete. And if you go through, and I want you to see how this works, guys. And I know that it works because I've watched it work for hundreds of people. If I take a picture of a termination condition and I actually write on my chart, come on up, polar bear in a blizzard. That's not what we wanted, right? Let's try this one. It's not going to work for me. We'll try it one more time. There we go. This one's labeled terminations, tops, and bottoms. Nope, Spice, I don't even teach with a 21-3. I use 2 charts. Have you ever been in the beginning of my class? 2 charts, that's it. 2 charts. Don't give a crap about a 21-3. Couldn't care less about a range chart. I don't need it to be successful with this trade. All it is a reason for me to look at something else and talk myself out of following my rules. Well, my rules weren't met for the high probability trend trade, but the 21-3 said. Man, if the 13-2 is slow, imagine how slow the 21 is, Spice. You don't need it. But here's the question, and guys, I'm directing this to you guys that are struggling with termination conditions. If you go take a picture of price reaching an area and the triggers remaining above, and you take the time to type out, and this is the part that people skip, large chart defined termination conditions. If price reaches the area and the triggers remain above support or below resistance, I've reached a termination, not a clear path, rule number 2 not met. Do you suppose that if you took 25 pictures that look like this and took the time to annotate them, and you just kept going through over and over, dang it, there it is again. Price reaches resistance, my triggers have not gone through, this is a term, no clear path, rule number 2 not met. How many times do you have to do this before you stop hoping that area of support breaks? How many times do you have to take that picture until you stop giving your money away needlessly? Guys, it doesn't cost anything to remain flat out of a position. 49, Rob, you're better than me. Put it at least a 0 behind that for how long it took me. But guys, go through this process. Take these pictures, annotate these charts. And if you're like, man, I just don't know. I don't know the rules well enough, Mark. Well, then let me give you this. What it looks like to have a strong top or bottom. A termination that reverses the market. Large triggers roll. What it means to have momentum and what it means to not have momentum, guys. There's my termination. That's only the potential to break. That's not a clear path. There's my clear path, small and large through, defined beautifully. Things you can write on your chart, and then windows of opportunities, not only where the market is most likely to bounce, but also the lines that I have to ignore because they're on the wrong side of the trigger, and exactly where to put my limit order for this trade. And then if you go to the second page, it's the trend trade checklist. I told you guys, I'm going to give you everything that you need. The trend trade checklist, guys, is a way to police yourself. And I think that this is most effective for brand new users if you go back and you use market replay. Market replay allows you to go back and just retrade the day. And it lets you fix mistakes, and it lets you practice for bigger moves, and it lets you, more than anything, watch the market as though it were live. And when you say to yourself, holy smokes, I think there's a trade there, you can hit pause and go to your checklist and make sure that you actually have a trade. And guys, these are the same rules that I want to see you writing on your chart, creating that muscle memory. And I'm telling you right now, I've never had anybody follow this checklist to the letter and do worse than 70% winners ever in the history of the software. And I've had some brilliant engineering type people run it through on simulators over like 500 days, and they always end up around 83, 84%. So I'm just saying, until you're good at this, keep it simple, keep it focused, guys. So I'm going to give you that as well. I'm going to give you everything that I have in my arsenal to make you an amazing chart reader. And this is the one that is the most important right now, guys. This is your KISS plan, the Keep It Simple Sunshine plan. This is the plan It's a stepping stone in your learning journey. So for you guys that are like, but Mark, I need more trades. But Mark, I have to be in the market more. I can't sit still. I hear it all the time, guys. This is a stepping stone. This is not your only trade. This is your first trade. And if you came up to me on the street, tapped me on the shoulder and said, hey, you look like a guy that teaches people to day trade, what would you say is the most important thing? I would say have a plan. Have a set of rules that have been proven to win more than they lose, and learn how to commit to that plan, guys. And here is your plan. It's designed to optimize your chances of success with the high probability trend trade. It's designed to teach you to read your indicators. And then through simulation, study, class feedback, and continuous practice, you're going to learn to read those indicators. And you're going to create a plan that suits your needs, guys. You're going to see so many different trades in this room, and I can tell you that the most successful traders in this room mastered the KISS plan so that they could find the other things, because the KISS plan gets you speaking to yourself in terms of advantages. I always tell people, scare the crap out of your pets by saying out loud, I have momentum. That path is clear. I'm going to look for an entry. Like, your dog should be able to trade by the 30th day because you've said everything out loud so much. My wife knows the rules because she's heard them from the other room 100 times, guys. Your simple plan for consistency. Don't fight the large chart. What does that mean? That means don't fight the trigger lines on the large chart. If the large chart says up with momentum, your job is to go up with momentum, guys. If the large chart says down with momentum, your job is to go down with momentum. That's the path of least resistance. And the easiest way to commit financial suicide is to trade against strong triggers. And then the second most common is trading in determination conditions. And guys, you've all done it, and you've all given money away, and you still believe they're going to break for you, even though they break less often than they don't. These are the two biggest challenges. So I'm talking to Andrea and Josh and Dunk. These are the two biggest challenges that new users face. These are the two biggest things that they do. If you can commit to this stoic in your first week, just saying, I won't fight the large chart, you're better than 70% of the traders in the world already. And now you just got to refine that entry. You've got to define your entry. Your entry rules are mechanical. They're very methodical. They're very pragmatic, guys. They help eliminate emotion. They help get rid of that fear and that anxiety and those sweaty palms, because all you're doing is you're taking a pattern that wins more than it loses. And your management is designed the same way, the way we looked at it. It's very mechanical. It's very if-then. Both of the entries and the management, guys, they are on that spreadsheet 100%. And then once you can find the high probability trend trade, it's going to open the door for that 50-50, that potential to break trade. And guys, this is the best way to do it, because the 50-50 trade does not have a clear path. I think everybody should print this out and put it on your desktop. So let me know if this makes sense. If I don't have a clear path, does it stand to reason that I should insist on the other 66% of my advantages? And then while we approach logic, is there any time ever that I may feel good about giving up 66% of what gives me an advantage? And I want you to think about that for a second. Is there any reason ever to look at your rules, to speak out loud in terms of advantages and go, well, I got an entry area. I guess I'm willing to risk my money. It doesn't even make sense. So you've got to get to the point to where you talk to yourself about these things. And the 50-50 trade, guys, means that you don't have a clear path. So you're going to insist on a strong top or bottom, a termination condition that reverses the market. The same lesson that you picked up when you learned the high probability trend trade. You're going to insist on odds favorable momentum on both of your charts. The same lesson that you learned through the high probability trend trade. And then you're going to make sure that there are no divergences. And you know about divergences on the small chart because you know that 3 of them can stop forward progress. Again, the lessons that you learn in the high probability trend trade will carry you to your next trade. And then I'll just enter the area inside of triggers, right? The same entry if I can mark yes. And then it reminds you guys, divergence, no trade. That's the second mention because divergence is a loss of momentum and I refuse to sacrifice 2 advantages. And then the management's a little different because it's not high probability. And it reminds me a third time that divergence is an exit condition. And guys, the one thing that you have to know, is why you're getting into the market. That's rules that have been proven to win more than they lose. And then you're going to work on management and you're going to have to know why you're going to exit. And you're going to have just as concrete set of rules that say, hey, things have changed. I need to exit. No matter what my wishes, my hopes, my wants are, it's time to exit. And guys, commit to having the rules met. And you have to know what kind of trade you're in so you know how to manage it. So I'm going to give you guys everything that I've shared in the room so far. And I did it in PDF, so everybody has access to it. I'm going to give you chart reading 101. I'm going to give you that exit conditions. I'm going to give you the checklist. I'm going to give you the KISS plan. I'm going to give you even the PowerPoint in PDF form that I use to teach the class every day. I have shown you what the rules look like. We've broken them down individually. We've talked about where to find them. We've talked about how to study them. All you need to do now is practice. All you need to do now is practice, is go back to your charts. Large triggers are red and the small triggers are green. Guys, I don't have odds favorable momentum. But when I did have it, and I did have the potential for an area to break, look at that tail. I want you guys to see this little correlation and then I'll disappear. Price pulled right back to the mid band, right in the middle of those triggers. Can you guys give me a Y if you see it? Whoops, where did that go? Sorry. What did I do? Price pulled right back to support, right inside of triggers. Does anybody see it other than me? This is what you're studying, guys. What happens if I circle that tail? Well, that's kind of right in between triggers. And that tail came right to the resistance, right inside of triggers. And guys, the pattern is true all day long. And the deal is that there's a best of the best look where you have favorable large triggers. And then there's going to be the looks, guys, that are almost perfect. And your ability to read charts, I mean, great googly moogly, are going to help you to find these entries. They're going to help you to find your stop placements. They're going to put you in a position where you know where the market is most likely to continue. And if I enter at this support inside of the trigger, I have to believe in my heart that it could go to this support inside of the trigger. Because those triggers are split, whoops, there's a little more ground to cover, which means that my stop is bigger. It means that my risk is going to be a little bit bigger on that type of look. It doesn't mean that it's a bad look, but it means that I have to know how to manage it. So, guys, that's my first hour every hour. I'll leave you guys. I'll leave you with crude oil as they jockey for position. Trigger lines don't match. Do you guys see that? The trigger lines don't match. The path was not clear. What did it look like here with all that momentum and the potential to break? Holy crap, right to a mid-band just below the triggers, and you knew exactly where your stop had to go. That's not favorable large triggers. But that sure is an opportunity, and you're going to see all of these opportunities the more you learn to trust the large chart. So I'm going to leave you guys with the large chart. I'm going to leave you with a small chart. I'm going to go take my leave for a minute, guys. Stand up, walk away. When I come back, we're going to click on the pictures that were posted, guys. And one of the things that's going to happen when I come back is I'm going to talk about momentum, clear path, and entry. I'm going to talk about momentum, clear path, and entry. I'm going to focus on this. I'm not going to judge you, grade you, berate you. We're going to celebrate every victory that you found, and we're going to learn how to fix any challenges that you had. That's all we're going to do. We're going to talk about chart reads. So make sure that you talk about these three things. I'll be back in 5, guys. And remember, crude oil inventories in about 16 minutes. So we'll pull it up when we do it, when it happens. Go stretch your legs, y'all. Let's get back to work. All right, so here's that feeling of being left out, right? We saw momentum, the path was clear, and those jerks didn't give us a pullback, did they? Ooh, or are they? They're trying to give a reversal bar. If they do, I have one line inside of triggers, guys. I have one line inside of triggers. If they can give me a pullback. Can you give me a Y if you see it? If we took this picture and we did this and we drew an arrow, do I have odds favorable momentum? What do you think? Absolutely. Do I have a clear path? Absolutely. You guys, this is the most important annotation, I think. Do I have an area inside of triggers? Absolutely. I sure do. 100%. See how that mid-band came down? Let me get 2 ticks below it. And now we're powerless. It's either going to get me or it's not. What about it, Jonathan? It didn't reach it, did it? But let's ask ourselves the real question. Where do we define areas? Jonathan, I talk about it every morning, 100 times over. Where do we define areas? It is there. Look at that. That one's there too. That one is there. That one's also there. But Jonathan, I don't define the areas that are problematic on my small chart. I define them on my large chart. Termination conditions come from the large chart. That's it. And this large chart says odds favorable. This large chart says I haven't reached the area, so the recipe for the termination condition isn't met. The large chart's even coming from a termination that rolled the strong top. The only thing that I'm not in control of, guys, is whether or not the small crowd gets to my entry, and it looks like they're not gonna. Or will they? Because, guys, this is the one thing. Here's your refinement process. Watch this. I'm going to circle the bar on the large chart. All of this happens inside of that one bar. Large chart never changed. These are just fluctuations. Until it hits that blue line, my rules are met. So I'll just hope. I'll hope that they come back for me. I don't chase trades. And I try to stay focused on my rules. And that's kind of the point that I'm making here, guys. Is sometimes it's not your money. Sometimes they don't get you. Sometimes you wish that they would have, but they just didn't. And we've got news in a few minutes. But you'll never be in control of that. You'll never be in control of whether or not your entry gets hit. You'll never be in control of whether the market goes up or down. You'll never be in control of anything other than whether or not you waited for your rules to be met. That's the only thing you'll ever be able to control. And rules don't have to be KISS plan rules, guys. Momentum, potential to break. Look at that entry. Right at the resistance inside of triggers. Get paid at potential trouble. Get out there. Joel, this is beautiful. Momentum with the potential to break. And you capitalize wonderfully. What a great trade. Odds favorable, potential to break. You get in a little bit low below the synthetics. Notice price didn't go to the wrong side of them. And all that momentum carries it down to trouble where you get paid. 2 for 2. Momentum for the win. All the momentum in the world, potential to break, and guess what? It didn't. That's it. It just didn't work. They can't all work. 2 out of 3, 66% winners. That's outstanding. I thought maybe they might want to come back for me. They may not. I'll leave that running. Joel, it's great trading. It's great chart reads. And the quicker you read, and you read fast, you manage amazing when you take these trades. Entry area just outside of favorable large triggers. So an unteachable opportunity. That's crap. You knew your rules weren't met. which means that you said, I'm not taking this trade directly, and your fib should have been over here as well, but the rules for entry weren't met, and you chose not to take the trade. So you've had your teachable moments. You knew better than to trade into it. Good stuff. Oh, look at that. For you guys that jumped in, it looks like they're going to come back for us. I hope they do. I hope they come back for us and then just crater down to that fib before news prints. Guys, this is why. This is why we have rules. It's still odds favorable in a clear path, right? Look at all of this nonsense happening inside of that bar. This is why I don't chase trades. If I had a nickel for every time I've jumped in right here, only to have it come back to the perfect entry, I'd have a sack of nickels. And I don't need any more nickels in my life. I want dollars. Let me see, who was next? Jonathan. Everything says down, and I really like this, guys, and these aren't necessarily high probability trend trades. But I want you to see something. No. But Pete, let's pretend for a second that this is just an educational room and we're trying to make sure people understand entries. Just for grins. Just for grins. So guys, he's not taking a high probability trend trade. He's just jumping in, right? Jonathan, are you in here? But I want you to see something. Everything says down, right? And Jonathan says, wait a minute. Let me get to the other side of things that might ruin my good time. Let me trade from the fibs instead of into the fibs. And Jonathan, all that momentum carried you right to the next fib. And then you said, oh crap, there's a fib. Let's gauge the bounce. And then we'll try to trade with momentum back down to it. So you had room to targets, guys, and this is one of the biggest things. Once you have momentum and some room to make money, you're going to find a way to make money. And Jonathan, you did a great job with this one. And that's one of the biggest lessons, I think, that's so important for you guys, is that you should be trading to areas, not into areas, right? You should be looking for opportunities to get paid to those yellow one-to-ones, and then you have to wait. They're either going to break or hold. And Jonathan, you did an awesome job of being patient, of saying, let it clear trouble, and then I'll capitalize on the momentum, which means that you have an understanding of those two very basic concepts, momentum and clear path. And you did an awesome job making money with them. So bravo to you, my friend. And then Pete does the same thing. Look at this momentum. Let me get to the other side of the nonsense and get paid. And then he gets back in. And then Pete, is it Kurt? And then Pete trading directly in determination conditions again. Man, you've got a thing, brother. You got a thing. Everybody has a thing. Yours is believing that these lines will magically break for you. Such a beautiful run all the way down. And you missed the add-on. And then you finally reached the trouble spot and you said, let's get more. And that didn't work out. And you gave $40 a contract back. So, guys, you got to do you, but trading into those areas, it rarely doesn't work. It works less than it doesn't. For real. For realies. Guys, crude oil inventory is in 2 minutes. I'm trying to keep tabs on it. so that we can see if there's any sort of reaction in the market. And then Pete made a very valid point. He's like, I won't even trade 5 minutes before crude oil inventories because there's literally people jockeying for position right now. People are literally setting up to wait to see what they say. And then there are people that are going to react to it. So we'll take a second and we'll watch it. It's just like any other news release, Andy. What I've found is that with crude oil, there's a lot of people waiting for the news release. And there's a lot of people that are going to make decisions on it. And you will see crude oil prior to releases where there's a little bit of a fight, right? Where the buyers try to go and the sellers try and the buyers try and the sellers try. And you'll see it, and we'll see what happens. The release is coming in just a minute. There we go. There's your news release. It was still momentum for the win. But you guys see the way that spiked? Sometimes it spikes for a couple seconds. Sometimes it spikes for 20 minutes. Notice how the area is not inside of triggers. So Rob, this is one of those ones where you're like, man, I think this fib is going to stop it, but I'm not sure. It's on the wrong side of triggers. Rule number 3 isn't met. What do I do? Do I take it anyway? Is this fib going to stop it? Are these 1-to-1s going to stop it? Is it just going to go right here? Is it going to come back to the mid band? What do you think? Does anybody know for sure? I don't. The only thing I'm sure of is that my rules weren't meant for entry. And we'll come back to it and we'll see what it did. But I'm going to start clicking on pictures again. Jonathan, I think we got some for you. And that's kind of your whole day, right? Let it clear, make some money. Let it clear, make some money. Let it clear. Odds favorable, clear path, guys. Jonathan, putting on an actual clinic that when you follow rules, when you have a plan, you can go. And then your next level, Jonathan, is you had odds favorable and a clear path. Pulled right back to a mid-band inside of triggers, pulled right back to a mid-band inside of triggers, pulled right back to a mid-band inside of triggers. Guys, there were 3 opportunities to go long there, and it made it to the fib. How do I know? Because I took the 3rd opportunity, and then when everything rolled, I added on to my position. And sure enough, I got paid at a fib, and I didn't care what happened next. Once you have a plan, guys, all you have to do is work on following it. And then Pete, in a strange change of, and you're exactly right, Andy. Even with the perfect high probability trend trade, you still don't know what it's going to do. You'll never know what the market's going to do, guys. But the market has a memory, and it creates patterns, so you trade patterns. And that's it. And then I love this, Pete. Instead of trading into it, you let it break, take a momentum, down to the next fib. Absolutely beautiful. Absolutely beautiful, letting it clear. And then, we took the same entry. I waited for the reversal bar here, and then I added on there. Absolutely beautiful. Great trading, Pete. And this is why I don't give you a bunch of grief when you trade into areas, because I know that you have a plan. And guys, if you're a brand new user, it's hard to determine when you have a shot trading into them and when you don't. And if you're not a chart reader yet, it's tough to manage if you can't read your charts. Even experienced users make stupid mistakes. We already saw this one, Pete. I think I already clicked on it. Into the 1-to-1s. That's where I got a little sideways. Andy, you jumped in on momentum. Make a little money as it pulls back. You got in a little bit lower. Out another one. Nicely done, Andy. Just grabbing your little bit in the middle, right? Just taking a little chunk out of the middle. Weak triggers. Look, do you guys see it? Weak triggers? Oh, no way. Hold on. Are we serious? 1, 2, 3 divergences in the same price range? How cool is that? Do I have odds favorable momentum? Ladies and gentlemen, what do you think? Do I have no termination conditions? If I get a pullback, do I have any areas right there at triggers? What do you guys think? You like it? I don't know what a 35 tick gap on the small chart means, but I'd be hard pressed. Am I guaranteed a winner if this pulls back for me? Yeah, but by the time it reaches an entry point, Pete, it's only 14, right? Big difference. I've only got 18 ticks to the fib. But by the time of the pullback, I've got 48. So now I'm just chasing, guys. I'm just hoping. Come back and get me. Come back and get me. Ron already got paid on the chili dog. I bet we're going to see that picture. And Kurt, you're right. We trade probabilities, brother. We trade patterns that have been proven to win more than they lose. And that's it. That's all we have is patterns, is rules. Oh, it's just a trade that Ron takes. And he used to say, man, that's such a nice trade, give him a chili dog. So we just started calling his trade a chili dog. My rules are met, guys. The only thing that I'll never be in control of is whether or not they give me a pullback. That's the only thing that I can't control. Does that make sense? Sometimes it's not my money. But here's the deal, is when you start getting comfortable with momentum, when you start understanding a clear path, there's a lot of you guys that cleared the one-to-ones with this look, and you're still long all the way up to the fibs. Guys, there's a lot of opportunity to make money. You just have to find yours. It's 74.69. Right on. You didn't go short against the momentum, did you? Smart man. And guys, look at this. Instantly, when it hit the fib, bing bang, loss of momentum in a couple. What a great place to get paid. Did any of you guys find a way to capitalize, to take that one? None. That's okay. You will one day. That's it. The only thing you can do is jump the fudge in, right, Andy? That's a good look to do it. And look at the reaction off of this fib. Do you guys see it? Almost instant. You guys knew about this fib, didn't you? Yeah, you did. You most certainly did. Belt, you tried to take the last short. 3 divergences says get out. And you got out at the fib too. You actually had a fib right there. I don't care. You took weak triggers into a fib. And Belt, it was just as likely to do this off of that pivot. No, it was there the whole time, dude. Are you telling me that it miraculously appeared for your picture? I find that hard to believe. My pick has nothing to do with your charts, Belt. It's not on mine. I'm in a different time frame than you. My midnight is different. So you're telling me that this giant fib just showed up for the picture. All right. Never seen that happen in the history of software. So we need to get you with Jason, take some pictures, probably build a plaque or something. My chart didn't have one. Have you taken any other crude oil? Show me a picture from earlier today. Let's see if it was there. Just for grins. So one of the things, Belt, is you are 2 hours behind me. You're running Pacific, which means that we have a different midnight, mountain, 2 hours, sorry. And that different midnight means that your software starts measuring all the swings at a different time than mine, which means that you and I are going to have different fibs. You can't trade my charts, though. See, I didn't have it. Didn't have it. Kurt, I believe you said something about CHOP in the S&P. It was on yours, Pete. Yeah, look at that. Didn't quite hit the fib. Right back to the fib. No momentum. Termination, 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 termination. Egads and little fishes. Termination, termination. No, they've been moving lots, Morgan. They're just caught in between two fibs. John Novak's fibs have defined beautifully. Beautifully. But Kurt, here's the deal. And guys, this is so important for you to realize. And this is what I think is one of the best parts about Nexgen. Once you learn to believe it. Every one of those says don't take the trade. These are the kind of markets where people get absolutely chewed up. These are the kind of markets where people get destroyed. And yeah, once you say to yourself, man, I know where it has to break for me to get into a trade, all it does is you just sit on your hands and you're like, dude, that's cool, we're there. Steve, it's hard for you to do anything with NinjaTrader because now you see it, then you don't, so you're only an observer. NinjaTrader randomly and without completely warning shuts down. Don't even need to be doing anything on the charts. Even if I'm looking at the chart, suddenly all charts, the workspace and control panel closed. 5 minutes ago, you left your workspace open, get coffee, came back, NinjaTrader's closed. Yeah, and that's a NinjaTrader thing. Shouldn't have watched the Evil series. This is on you. You put that voodoo on it, Ricky Bobby. So Steve, NinjaTrader has challenges. There's absolutely no doubt about it. There are ways to mitigate those challenges a little bit. And you may already do this. Do you go through this routine every morning? You made all new workspaces last night. Did you go through and get rid of the data to make sure that it wasn't corrupt? And Steve, it's weird, man. I'll have days and days and days where NinjaTrader won't do anything. Yeah. And then I have days where it's like it's suicidal and it jumps off of every bridge that it sees. And I know that's frustrating because I deal with the exact same frustrations. And but from lemons come lemonade. This is the precise reason that my brother has invested an enormous amount of time and money into creating a browser version that will behave identical without the crashes. And gosh, it's so close. And we've been on the edge of our seats waiting for the programmers. And he's got another meeting this afternoon with all the programmers. And there's so much that goes into it that I don't understand. And man, while I appreciate the frustrations and I've shared the frustrations, imagine teaching this class and trying to go to your charts and then it's just not there. You can't build what we have, Stoic, on TradingView. I love TradingView. Absolutely love TradingView. I've got it. I've got my... Oops. I've got all my stuff, and we've actually, with my brother, have been able to recreate trigger lines, divergences, and one-to-ones. But without those fibs, it's an incomplete product. But one of the things that we're doing with this funding company, guys, is there's 50 million TradingView users. So we're trying to create something for them. And then there was your break, Kurt. You knew exactly where it needed to break. And when it broke, woo, there it goes. So Steve, man, I appreciate the challenges. I share the challenges. We're doing everything in our power to make NinjaTrader not necessary for Nexgen users. So much so that NinjaTrader users won't be able to utilize the funding company. John Novak is building his own trade copier with his programmers, a standalone platform that you could run on your iPad at the beach, which is pretty cool. So the cool thing is, though, Steve, is if I take a trade, if I enter the market and NinjaTrader crashes, it's still going. Right? So look at that mid band right at the edge. Even if I get in and I shut down NinjaTrader, I come back, those stops and targets are in place. And I've done that before. I've lost it and opened up to a big winner, and I've lost it and opened up to my stop hit. So it's not like you lose your protection, but man, it's frustrating, especially if you have a slow computer. My computer loads charts in like 28 seconds. So I can be back, and I can be back quick. And if you are trading Tradevate or Rhythmic, there's ways where you can have Tradevate open in the background. So if it does crash, you have that level of protection. Guys, that's a nice one. If you were 2 ticks below, you probably got an entry there. You have Tradevate. So yeah, so you can pull up Tradevate and just go. Look what that termination condition did. And then, Rob, are you with me in here? And this is for everybody. That's okay, Jonathan. Why were you looking at oil into a termination? There was nothing to do. What the hell were you looking for? It won't do any good, Steve. All you'll be doing is giving him a bunch of reading that he doesn't need. NinjaTrader support and John Novak, there's nothing they're going to tell you that they haven't told him for the last 2 years. John has given them everything to correct this problem. Everything. John has had programmers. I had programmers on my desktop, my laptop, and a third computer trying to break the software to look for some rhyme or reason, and it has nothing to do with the software. The software is the same whether it's 7 or 8. It's the platform, Steve, and Ninja's not fixing it apparently. And I love Ninja 99.8% of the time. And that 0.2% frustrates the hell out of us. Guys, I wanted to share this with you. Do you remember when I said, and let's put this in two directions here. Couple different lessons in one picture. The first one is that there's no reason to trade into a line if the triggers don't break, right? There's just no reason. It's hope. The second is that once your lines on the small chart get outside of the triggers, you don't know where it's going to stop. So jumping in arbitrarily at a mid-band, you just got run over. And then when price reaches the mid-band and the large triggers are a full bar away, this is when your mid-band behaves as a termination condition. This is a great way to determine where the market's likely to stop and likely to close the gap back to the large triggers. So there's that whole lot of indecision until you finally get to this point, and then I bet you somebody might have said, with a close on the correct side of the small triggers, I'll try to close the gap back to those synthetics. And that's a trade that people work on later when they get a little more comfortable. Guys, excuse me 1 second. My dog is jingling the back door. I'll be back in 30 seconds. You go outside, baby. Come on. All right, sorry about that, guys. But this was the lesson that I wanted to get. And Rob, I want to make sure that you got it if you're in here. You were like, well, crap, no lesson. The lesson is you don't have any idea where that thing's going to stop when you get to the wrong side of triggers. And it could have been the mid-band, but it could have been this mid-band. And let's be honest, man, after a good top, it could have been this fib. But what you see is the buyers push all the way to this point, and the sellers test the waters, and the buyers don't feel like they're done. Maybe they didn't get all their profits, and now we're in this dance, guys, and we're trying to figure out who's going to win. And we will never know who's going to win. Ron says, check this out, Mark. When I get weak triggers at a fib and divergence prints, I have so much faith in termination conditions and losses of momentum right at those termination conditions that I'll take a little snippet. I'll take just a little snippet to trade that reversal bar that's more likely to come. Guys, this is aggressive. That's not a new user trade. That's an experienced trade. That's what I'm talking about, Bell. That's what I'm talking about. Potential to break. Perfect entry. The only thing that I might say, Belt, the only thing that I might say is this 56.27 fib is the point. That's your first trouble spot. There's nothing wrong with getting paid there. Oh, and you did. You adjusted. Because at that point, if it holds, you still have money in the bank. And dude, great hold to the second fib. What a great trade, dude. Beautiful. Potential to break. Didn't reach the next. Perfect entry. I love it. Does it help? It takes some of the stress off, doesn't it? That's why when I teach with 2 contracts. I mean, you're still on sim learning, right? But you're doing 2 things. You're learning to get paid at trouble, and you're also learning to hold for a little more money. So, Rockstar Belt, way to take those lessons. And check it out. It decided to go up, didn't it? There were no short trades. 90%, guys. You're just sitting on your hands and waiting. And Belt, did you go back? Was that fib there on crude oil? Did you find a picture? Yeah, I had a feeling it would be. But that's one of those cool lessons. No, it was. Belt, it was there. But if you acknowledged it, then you weren't allowed to take that trade. I promise. People will tell me all the time, dude, Mark, that divergence wasn't there when I went short. I'm like, yeah, if the tree falls in the woods, does it make a sound? Is it one of those? Belt, you're like the 4-year-old. If you close your eyes, I can't see you anymore. Yeah, at Fib updates it will be, Andy. His was there for 6 hours. But that's one of those things where, guys, I've done it too. And this is why I take pre-pictures. So I'll literally, I don't know if I have any. I'll take a picture before I enter the market. And I go back and study those pictures. You have noticed the fib can be... Well, if it's way off to the side, it doesn't count. So, for example, this fib doesn't matter. But when it starts reprinting, it does. But fibs will stop printing. When the software runs its calculations and changes things, they'll start printing and they'll stop printing. Yours was there for a while, though. Yours was definitely there for a while. So like this particular fib has been in place for, I don't know, 12 hours. We knew about it. And look at that fib. This is why fibs amaze me. All that resistance held, and it held right to this fib. Have a good one, Andy. Thanks for being here, man. You guys are leaving too. This is my favorite thing. When you guys leave because you've made your money, it's time to go away. Have fun. Yeah, it's only going to be like 94 here today, which is pretty mellow. I may have to go play golf today. I'm not allowed to just leave you guys, though, the way you're allowed to leave me. Well, it's just not funny to you, Andy. I find it hilarious. Not really, I don't. 100 yesterday in Central Illinois. Yeah, we've been over 100 for like the last month, it feels like. We may have had one or two little reprieves here. I don't mind it. I'm good to about 110 if the humidity is low. I start getting cranky in the cold. That is funny, Andy. I love that. I've done that. I had a buddy. So I grew up riding motorcycles. Had a motorcycle in high school, and we were somewhere. And man, I got on my bike and I couldn't start it. And asshole friend had pulled my plug wires off of the spark plugs, and I'm just sitting there going, man, he got me. It was pretty funny. Oh, wow, Joe, that's crazy. 161? And Rob, you can have your negative 20. What do we think, guys? Are we looking for a trade again? We've got odds favorable. We've got the potential to break. That bike happened to be Kickstart, Andy. No, it was so funny. We're still friends. We still laugh about it today. Yeah, my dad did that on my first car. I got grounded from it, and all he had to do was pull the battery wire. I didn't know how to fix it. So guys, where are we at? Strong triggers. Potential to break. If I get a reversal bar, is my window of opportunity pretty clearly defined? What do you think? Medium probability trade. Medium probability trade. Andy, you are a jerk. Does everybody see that the path isn't clear but the momentum is strong? Does everybody see that there are lines inside of favorable large triggers? Exactly, Belt. Until the bottom line of that large trigger gets through, the path isn't clear. We're clear on the second fib. We just cleared the second fib. But this one up top hasn't broken yet. Does that make sense? We've defined exactly where the market is most likely to continue if there's going to be a bounce in that direction. And guys, now once again, we're just sitting on our hands and waiting. Again, you've got different fibs than me, Belt. One of the things, if you want to be like I am, now I have a clear path and only one line. If you want to match me, you're going to have to move to Eastern time frame. Look how small that window of opportunity got. Your midnight is different than mine. Well, changing your computer doesn't change when you wake up. Mine's on Eastern because I want my Eastern to match Nexgen. I'm in Central time zone. Nexgen servers are in Florida. I'm in Texas. Which is pretty much just Florida with more guns, I think. Yeah, it can be one tick. It can be a data provider. Yeah, not really. The mosquitoes are kind of the same. That's why I can't wait to get back to Austin, because the bats eat the mosquitoes. Not a lot of mosquitoes in Austin, Texas. Are my rules met? I want you guys to tell me. I see odds favorable clear path area inside of favorable large triggers. Is there anyone seeing something different on my charts? This is where I take a pre-trade picture. And I've just got to double check. So let's see. Come on, call out. Snagit is gumming up. There we go. Did I have odds favorable momentum? I do. Do I have a clear path? I sure do. We'll just pull this one over here. Do I have an area inside of triggers? One freaking line. I'm 2 ticks above it. That's it. That's my rules. There's my reversal bar. Oh, look at that. It came and got me. So my stop, 1, 2, 3, 4, 5. 5 ticks outside of the lowest line of the triggers. First target is at 14. Second target's at 24. So now let's kiss plan it, guys. There's nothing for me to do. I either get stopped out for 7 ticks a contract. That's really not a big deal, is it? Or it goes to my first target. Those are my only options. I'm not in control. Who watches that number change and freak out? It's up, it's down, crap, it's good, it's bad. I'm winning, I'm losing. Ah. Check this out. One thing you guys can do is right click and go to properties. And you can take that off of there. So now you don't know. The only thing you know is where your target is. There's my reversal bar. 1, 2 ticks below. I've got 6 ticks of risk on this trade. I have 6 ticks of risk on this trade, and I am 4 ticks away from my first profit target. So close. One more tick. You can do it. Oh no. There's nothing to do, guys. It either goes or it doesn't. Good morning. It either wins or it loses. There's only up ticks and down ticks. Any emotional pain that you feel during a trade is self-imposed. What does the large chart say? Large chart says up, right? Belt, when I get a reversal bar in the direction of the trade, I move my stop 2 ticks below it. Whoop, there's my first target. KISS plan says I'm break even now. And I'm either going to hit 24 or it's going to come get me break even. This is the KISS plan, guys. This is 100% what I teach for the first hour every day. Is there anyone bummed about making $100? I like to see it. Is anybody sad about $100? Show me a picture, Kurt. Do you guys think it's easier to trust the large chart when you're break even on the small chart? Do you see? Guys, I'm not worried at all. Couldn't care less. It's either going to get me or it's not. My large chart says we're going up. My large chart says the path is clear. Come on. Boom. There's $300 in your pocket, ladies and gentlemen. Does it work? Is the methodology sound? All you got to do is learn how to work it, guys. But here's the challenge. And let's do this real quick. It's still going too. Belt, why we can hold for bigger moves, right? So check it out, guys. If you jumped in on the reversal bar, you probably got stopped out early. If you let divergence talk you out of a high probability trend trade, you didn't get paid. If you let the small triggers turning against you, you didn't get paid. If you put your entry down here at the mid band, you didn't get paid. But if you followed the very simple KISS plan, you just made $300. Belt, little different look, right? But perfect. Couple ticks above, everything says up, easy money. Jonathan, why on earth did you only make $120? No. I'd be mad as hell about it. Why did you only take 120? All right, that's fair. Kurt, what are you curious about? Help me out here. If you got the pullback to the one-to-ones, that would have worked, right, Kurt? One of the most dangerous comments for traders. So check this out. If I just would have jumped in right here, I would have made a lot of money. And if I would have just gone long at the mid band and out at the large triggers, I would have gotten paid. But then I would have gone short back to the mid band and gotten paid. And then I would have taken the mid band back up to the triggers and gotten paid. And then I would have held that one. I would have gone short there because, you know. And then I would have held that one and I wouldn't have worried about any of these lines because they broke. And then I got paid right here. But then I said, oh my gosh, look at that big blue fib. I should go long. And I held that one to here. And Kurt, I'm a freaking genius with hindsight. Your chart. All right, so write your rules on the chart, Kurt. You've got odds favorable. You've got the potential to break. You've got a pullback directly to a mid band right at the top of the triggers. Break of what area? The one-to-ones? So this is your second trade, Kurt. This is that potential to break trade. You don't have to answer this. Don't answer this question. But if you've ever been in a bar fight, the trend down is the captain of the rugby team, and he's been drinking. The odds favorable momentum is the Heisman Trophy winning linebacker, and his girlfriend just broke up with him, and he's pissed. The potential to break is the kicker, but he's still scrappy, and he's ready to fight. All your triggers down are the offensive line, and they're liquored up. The area right there at triggers, well, that's that guy nobody likes to make eye contact with. Everything says this market is going down with strength. There's the captain of the chess club. Does that make sense, Kurt? And this is one of the cool things, guys. And Joe, this is one of my comments on your charts this morning. Is when you talk to yourself in terms of advantages. When you literally make advantages the reason that you enter a trade, what happens, Kurt, is you start getting outside of the very basics. And you start saying, holy shit, there is so much in favor of this that I feel compelled to take it. I feel compelled to enter that market. My risk would be what? 5 ticks? Maybe 6? To ride that wave of momentum and try and catch it all the way down to the fib. And then once you get to the wrong side, you just don't know. And sure enough, that's what happened. It's an awesome picture. Does that help a little bit? Cool. And this is one of the cool things, Kurt, is, man, we just keep going through stuff over and over, right? Look at that. Nothing breaks support. No reason to go short. No reason to go short. Your bar fight is over. You are now the captain of the chess team. And there's a lot of reasons you're about to take a beating, right? The momentum isn't there. The triggers don't match. The path isn't clear either direction. Is it okay to do absolutely nothing right now? That's what you have to ask yourself. Am I okay not making money between 18 and 23.50? You gotta be. And even better than SOH, and I like that one, not my money. It's just not my money. So what has to happen, Kurt? Either this area breaks. If it does, I'll look for odds favorable momentum and room to get to the next fib. Or that support's going to be the bottom and everything's going to go up and I'll look for my rules to be met. But in the moment, I'm going to have a Snickers so I don't turn into Betty White. Joel. Perfect. And guys, here's one of the reasons that I like this classroom so much. I'm not projecting on anybody, and this probably comes from my own hang-ups. But when I'm learning something new and I make a mistake, the only thing that I focus on is that mistake. And I don't necessarily focus on it to try to be better from it. I focus on it and I beat the shit out of myself over it. Why am I making mistakes? I know these rules. Why am I not taking these rules, right? And then what happens is that we forget to celebrate the victories and say, man, I might be good at this. Belt, you're not listening to me, brother. I want you to see something. I feel like we're growing apart. I need my ring back. I want you to look at your timestamp, okay? And I want you to look at my timestamp. You're at 9:03. I'm 2 hours ahead of you, brother. What does that mean? So when your software opens up, it goes back 10 days. And when it goes back those 10 days, it measures every swing in the market. Every swing, every up, every down. And it starts at midnight, Belt. It starts at midnight, 10 days back. You and I have a 2-hour difference between yours and mine. You have 2 hours worth of ups and downs that I don't have. Which means that you've got more calculations, you've got more things to factor, you've got more areas where things are concentrated. And if you and I do not have the same midnight, we're not going to have the same fibs, more likely than not. Well, that's where the server is. So, Belt, the fibs aren't calculated in Florida. I see what you're saying. So watch this. This is kind of cool. This is fun. All right, so here's the S&P, right? No, yeah. So right now I'm 10 days back. Here, do you see where all the fibs are? Let's take a picture of it. And then I'm going to change the days back. I'm going to give it a midnight that starts 5 days back. And it's going to start recalculating from 5 days back instead of 10 days back. Do you see the difference in the fibs? It's calculating from my charts, from my midnight, from my data. The server that makes your stuff work is in Florida, but the fibs are unique to what you have going on. Look at the difference between the two. Pretty cool, right? It took me a while to grasp that. And my brother's like, you got to put your computer on Eastern so that we're the same. And I was like, but John, I'm in Texas. He's like, shut up. I'm telling you, you have to put it in Eastern if you want to be the same. So if you can adjust your... no, you're okay, man. So if you can adjust your clock, if it's not a work computer... No, it's not NinjaTrader. It's your actual computer. It's a work computer, then you're just going to have to be okay. Or you're going to have to buy a computer to trade on that you can make Eastern. NinjaTrader, you can't adjust it. It's literally, it's working off of your time on your computer. And if you change that time on your computer, it'll violate your software. So make sure that if you do change it, that Jason is nearby so that he can get you up and running again. Hey Mark, you're seeing odds favorable momentum, clear path 75%. I don't have a 75% clear path, C-Dub. Get in at the area and the triggers, ride out the 8 tick loss, then make about 40 ticks. You're not even showing me your large chart though, are you? What time is it? Because this is at 10:50. Where did you get in? That's the same circle? That doesn't seem right, C-Dub. So here's the part that you didn't show me, C-Dub, is where it rocketed all the way up to that. So it's cute that you say ride out an 8 tick loss. Something's not right. Something isn't right. Divergence at the fib pulls back to the 1-to-1s. Divergence at the fib pulls back to the 1-to-1s. Something doesn't match up, C-Dub. Because your large chart shows a pullback from 22 all the way up to at least 29. What chart are you using? Oh, it's an 8-2. So now you're using a 13-2 and an 8-2? No wonder it looks different. I don't have a plan that uses an 8-2, so I guess it's a 50-50 trade. No, it's not. Yeah, it is. It's a 50-50 trade. And the 8-2 makes it bigger, so, I mean, it looks pretty good on this one. From 28 to 29, 5 ticks still might have gotten you 6 ticks. But on a bigger chart, you'd need a bigger stop. I'm not sure what I would gauge it at. That confused the heck out of me, C-Dub. I'm with you now, though. Yeah, on an 8-2, it's a different look. No, it's okay. I'll do this sometimes. I'm like, that doesn't even make sense with a 5-1. And it wouldn't have. But the 8-2, it makes total sense. So my bad for not looking at this and assuming that it was a 5-1. That may be your chart if you want bigger moves. But you're going to have to readjust your stop a little bit because it is a higher time frame. 4 to 5 ticks may not make the same amount of sense that it does on a 5-1. Man, they're just killing it on the S&P, aren't they? All right, belt, potential to break or broken area. What do you think? Well, I don't know what yours looks like. Mine is potential. And my window extends from 98 all the way up to 07. So you could sell this entry. That's another line that may hold. That's another line that may hold. That's a pretty big window, right? Pretty big window. And no matter which entry I choose to take, there's my stop. So now you start asking yourself, is 20 ticks what I'm willing to risk for potential? Maybe not. Am I cool with 12 ticks? Yeah, I think I'd be good there. So on these trades, you've got to determine how much you're actually willing to risk. And then you said through your picture, I'm not willing to get in at the lowest. But if they come get me at the top, I'm in 100%, right? Because it's only potential to break. And these are the decisions that you'll make later in life, right? Don't get all jazzed about a mid-band. I don't know what it is, but new users just get entranced by the mid-band. Yeah, and I'm telling you right now, it's areas inside of favorable large triggers. I love Jim, but Jim is doing you dirty. Areas inside of triggers. Areas inside of triggers. Fibs, mid-bands, yellow 1-to-1s. Steve, I hope you have a great afternoon. Fibs, mid-bands, yellow 1-to-1s. Why? The fib held. The mid-band is a moving average belt. The fib came to be through thousands of calculations, thousands of swings up and down. This is just a moving average. That's all it is. You do whatever you want. I'm cool with it. But I'm telling you right now, you guys that are so entranced by the mid-band and think that's the end-all be-all, you're missing trades. You're missing trades. All right, you're in 50-50. No divergence, right at the fib, right at the mid-band. Why not the fib? Because you got a hard on for the mid-band. Hey, look, it went through the mid-band and hit the fib. I'll be damned. I'll be damned, belt. It went right through your stupid mid-band and hit the fib right at the top of the window. It would be a shame to miss beautiful trades off of fibs because your mid-band wasn't in the window, wouldn't it? It did. It stayed in the window, though. This is why we create windows. There's your window right there. And it went to the top of it. That's all right. You do you. But I'm telling you right now, 100% without question, no room for discussion. Can't fight me on this one because it's been a thing for decades. areas. The verbiage is areas. Areas inside of triggers. Areas. What are my areas? Fibs, midbands, yellow one-to-ones. But you, my friend, can do whatever you want. America. I don't see a thicker. Which one are you calling thicker, Rob? But yeah. So the fat ones. Here we go. This is a good one. Did you say divergence line's true, C-Dub? Did I say fibs, midbands, yellow one-to-ones? Fibs, midbands, yellow one-to-ones. Fibs, midbands, yellow one-to-ones. Divergence lines are not on the list. I promise. But Bell, you're trying to create a single instance, right? We're talking about 100 trades, 1,000 trades. What are the areas that stop it? It's any of those three. And that's why we teach the way we teach, to give you the best chance of success. And man, I'll tell you right now, Belt, 1,000 times I've seen people miss trades that go beautifully off of a fib because they're hell-bent on getting a midband. And it sucks to miss trades when the rules say that it can be a fib, midband, or a yellow one-to-one. And it stinks. It stinks to miss those trades. So Rob, here's your map. I dropped it in the room. The big fat ones are the 21-3. You were exactly right. The skinny ones are the 5-1s. And then you'll find that the 5-1 and the 21-3, they won't print all the way to price. The only ones that'll print are the ones from the 13-2. That doesn't, well, you've actually got 2 there, right? So check it out. At 56.18, you've got a fat fib that stops printing, and then you also have a 13-2 fib that keeps printing. You've actually got 2 fibs right there. Awesome. It was hard to tell that that one was thicker for me until I made it bigger, but yeah, you're absolutely right, 100%, man. And then Jonathan. Come on, links. There we go. You already showed me this one. This was crude oil from earlier. And here, you don't have any synthetics on your chart, Jonathan. So the first thing to do is, here, do this. Click on your large chart real quick and hit F5. Hit F5, it'll rerun the NinjaTrader script, and we'll see if we can get those fibs back on. That's the first thing to do. And then if that doesn't work, I'll reload historical. I'll right click and reload all historical data. And if that doesn't work, I'll build a new workspace. I'll just start fresh. And then Bell, you're digging the 2 contracts? Good. Did it work, Jonathan? I'm guessing no. So now what we have to do, bum ba da dum bum bum. Okay, still loading. If those 2 don't work for me, I go straight to this and I just start fresh. And I know that it feels like a giant pain in the butt, I promise you guys it's not that big of a deal. I can go through this whole process in like 8 minutes now, where I just start fresh. And sometimes you just need to. Sometimes there's a little corruption in there. Weakened triggers, areas not broken, multiple divergences, areas on the wrong side. Areas on the wrong side, weakened triggers, right at a fib, divergence prints, weakened triggers. That one sure was pretty though, wasn't it? And then belt, I don't think it's an accident that they went right to the key Fibonacci area and through that midband, and they did it on both charts. They went through the large chart midband of the fib and they went through the small chart midband of the fib. Fibs are powerful. It bounced directly off the fib. It bounced directly off the fib and didn't make it to the midband. And I just don't want you to miss charts because you get enamored with the midband. I don't want you to miss trades. I don't want you to go, man, I keep missing these trades by 2 ticks because you've got some elfin magic working on a midband that isn't existent. Guys, we got about 20 minutes. What you want to talk about? And then Kurt, I guess you're all good. You're able to send messages now. Sorry, I just got your little DM. I don't always catch those. But it looks like you're good. So good top, odds favorable, clear path, almost too much. No such thing as too much clear path. Enter at the midband, just past the fib. Exit with profit. Did it not blow past the midband as much as it blew past the fib? And Belt, do whatever you want, brother. I promise you, do whatever you want. But I refuse to yield on this one, guys. I'm pretty warm, fuzzy. I'll hug your neck all day long. But if you keep telling me it's the midband when it's the area, I'm just going to very respectfully tell you that you're mistaken. It's all right. We can still be friends. I'll still buy you beer if I ever meet you. And this is a great example. You're probably like me. I don't drink a lot either. Is how many trades could you miss, right? No, you're great. And this is why I go back to these basics. How many times could you miss it off that fib and watch it go down and just feel like, gosh, why didn't I put my entry at the lowest point of resistance inside of triggers? And the language is real specific when we do this. Because what happens, and of course this one goes straight to the midband, which is kind of funny, but it could go down here. And here it goes a little lower. So I guess it's just a language thing. Of course, there it's the midband. It shows up a lot. But it's inside of triggers. And there it was the midband and then the fib and then the second fib. You watch it pull back and look for where it starts to bounce around and jump in the triggers. Okay. If only you had a way to define where it's most likely to jump around and dance. That'd be awesome. Morgan, trading indetermination conditions. With the split triggers, you wait for the reversal bar and it just pays dividends. Nice trade, Morgan. Very nice trade. Do you not see the giant fib right here? 74.83, no triggers through it. Am I missing it? Who was that? Oh, Muser. I'm sorry, Morgan. Hooked on phonics. Gonna get me. Muser, you see how you traded into the term though, right? Yeah, no worries. But look at the momentum. And there's no divergence. And he waits for confirmation. And I'm telling you guys, if you know what you're getting into, if you know what the perfect look is and what the not perfect look is, you know whether or not you want to wait for confirmation. And Muser, that was beautiful. Sorry, Morgan, I tried to put that on you. You just haven't posted today. I miss you. I'm missing fibs. Triggers are there. You don't have your synthetics. Jonathan, you don't have your synthetics. Look at that. I killed my ninja with all the drawing. Too many circles around fibs. So right click on your large chart, Jonathan, and go to data series. I'll pull mine up right now. So right click and go to data series. And make sure that tick replay is checked. Is it? That's what produces the synthetic fibs. Okay. So let's do this. Go to your NinjaTrader. Let's just try this for grins. And hit New and Chart. And we're going to build a new one. So select your instrument. Make sure that you have the 13.2 template. And make sure that tick replay is checked. Are you with me? So new chart, crude oil, 13.2 check mark, and then the template 13.2 Renko bar. And click OK. And let's see if this has your synthetics. And if it does, then the cool thing is you can just X that bad boy out and put this one in its place. I'm just trying to go through all the different things that I understand. That's such a good looking trade. No worries. New chart. Give me a Y when you're there. All right, instrument, crude oil, 1024. Click on it and it'll drop it down into here. And just give me a Y in the room after you finish whatever we just talked about. Cool. So now we're going to put our template in. Upper right hand corner, Nexgen 13.2 Renko bar chart. And now that's up in there. There we go. $13.2 tick replay. I like that you jumped ahead of me. And then just click OK. And give it a second to load up and we'll see what it looks like. Once the lines are on the wrong side of the triggers, guys, there's no telling what may stop. Well, it's black. Did you put your template in? Is it black but with bars? This is why tech is always easier, but that's okay. Do you guys see how areas on the wrong side of triggers don't necessarily stop a market? That's a valuable lesson for rule number 3, guys, and we're watching it happen right now. Just don't know. I just don't know. Okay, so it's loading right now. Feed those hamsters, man. Get that wheel spinning. And then when you guys end up with a quick computer, these things load up pretty quick. It takes a minute though. There's a lot of drag on a computer to run all these calculations. It's thousands of calculations. It's a crazy calculator. And it takes a minute. And you can see that it's calculating, that it's loading. And even now when it's calculating, you don't see all of my fibs. And eventually, you'll see the fibs. But until that calculating's gone, guys, it's running thousands of calculations. It's measuring every swing in the market, up, down, all that good stuff. And the S&P's got about 5 times more data, so it takes a little bit longer than it does crude oil. It goes way up, doesn't it, Z-Robot? There we go. Now I'm good. Now I've got it. I had a good computer, and then I built this one, and I've never built a computer in my life. And my brother sent me a motherboard and a new chip and cooler, and he goes, all right, put it together. And I'm like, so, man. But I pulled it off, and this thing is wicked fast. That's pretty cool. So we're kind of in a holding pattern on both right now. What do you guys want to talk about? This is where I'm going to flap my gum for 10 minutes and then set you guys free. Here's one thing that I was going to pull up that I didn't, but I want to pull up, guys. This is from Mark Douglas. If you've never Googled Mark Douglas or watched any of his videos, regarding the psychology of trading, he is amazing. He and John Novak spoke almost every day for a year before his passing. But the one thing that I want to really, and I highlighted it, guys, is stop expecting to win every trade. You'll never know what the outcome of the market is going to be. And when you stop believing that you have to win every trade, you're going to start winning more trades. When you start focusing on the execution of your method rather than worrying about what the P&L is, it'll floor you at how it turns your trading around, guys. And when you believe you know what's going to happen, you set yourself up for failure. When you don't care what happens, trade doesn't matter. Just a collection of 20, 25 trades. You got them. You don't have a template on here. But this one has all its synthetics. So you can right click and load a template on there. Or just use this one because that one works. That one's got large chart, small chart, 13.2. You've got all your areas on that one. Good stuff. And guys, this is one of the things that I love about the Mark Douglas stuff. Is you realize that all there is up and down ticks, guys. And emotional pain comes from what you believe. You create your own pain based on your experience with the up and down ticks. And the 4 fears are being wrong, losing, missing out, leaving money on the table. And if you focus on your fears, you're going to cause them to happen. But if you do not, and if you do not predetermine your risk for each trade, you're operating with the belief that you will be right without a chance of losing, which creates conflicts. Never trade without a stop. Make sure your stops make sense. Define the reasons it may work. Guys, those are your rules. Define where your analysis will be wrong. So as you start to grow and you start taking 50-50 trades and you have divergence, you have to say, this might screw up my trade. You have to accept that. And when you do, it gets you ready to manage. And when you believe that you don't know what's going to happen next, guys, why would you hesitate if the rules were true? It's because you assume or believe you think you know what's going to happen next. If the rules are true and you hesitate, you don't trust your rules. You're listening to that little devil on your shoulder. And when you believe that you don't know what's going to happen next and you're okay with it, you just take the trade and you don't talk yourself out of it, guys. And the pain of missing a winner is usually worse than taking the loss, and you got to believe that. And when you're fearful, every trade is life or death. Pain on every tick against you, euphoria for every tick with you. It's not the way to be a winner. So your rules eliminate the need to know what happens next. That's why we focus on rules. That's why I'm so adamant. Just learn your rules. Learn your rules and study them until you believe in your heart that they win more than they lose. And then once you do that, you'll be like, holy crap. And I'll tell you, when we took that trade together in class, right? When we went long on crude oil, does it show our stuff in there? Right? We took the rules-based entry and we put our stop where the market was most likely to not go where it shouldn't go. We had a very plan-based first stop and second stop. And they just went away, Jonathan? Get with Jason, brother. Let Jason fix you. Something's going on. Let Jason fix you. Because we could walk through it. Belt, my rules say get in at the highest point of support inside of favorable large triggers. So there's a recipe. Check this out. There's the bottom of my triggers. There's the top of my triggers. Do you see it? And if I pull the top of my circle all the way down to the highest level of support, that's it. That's the only line that my rules say is, whoops, sorry. Doggone it. That line inside of favorable large triggers is the only one inside of favorable large triggers. Do you see it, Belt? This is why the rules say areas. Because if you held out for the mid-band, brother, you missed this trade. It looks like it almost got it here, but the reality is when it started back up, the mid-band was somewhere down here. You probably didn't catch it. So this is why I went on such a behind-the-pulpit, preachy soapbox rant that change your language to areas inside of favorable large triggers, because it's the combination. And let me compound on that a little bit. So I don't need to support my position, but I will. I expect the price to come back to the triggers. Does that make sense? I expect it to bounce off of an area inside of triggers, which means that this is where I expect price to return to. This is where I expect it to bounce. And anything on the wrong side of that correction point is outside of my equation. And I think we just saw a great example. Maybe it was crude oil live. When areas get on the wrong side of those triggers, you just don't know. You just don't know. And I like to know. Look at that. You got stopped out in the window of opportunity 3 times. And then it went. I love the mid-band here. It's the highest level of support. And it came down, right? And Belt, do you notice how it stayed inside of the triggers the whole time? So you gotta commit, dude. It went off the mid-band. It could have gone to the 1-to-1s. That's why your stop goes out here. And it might have taken you out with a second lower divergence. But that's why I say areas. Well, I like that you entered at the mid-band. That's correct. The mid-band's the correct entry here. Absolutely I have. It just means that there weren't two contracts to take the other side of your trade. The mid-band is the correct entry. And let me show you. So go through the process again, right? Where are the triggers? Well, from the top line to the bottom line, that's freaking huge. This one, pretty much out of the equation. So then I look down at this one. From the mid-band to the 1-to-1s, this is the place where I expect the market to bounce. And dude, it never got outside of it. I love your entry. I think your entry's perfect. I think your first stop is ridiculous. But these are the things that you have to work through, Belt. I mean, you're not doing anything wrong by looking at a mid-band. You're just selling yourself a little short because there's other areas that are just as powerful. So yeah, you just ran that one a little too tight. Morgan, take care, man. How do I get a new email for this group? I guess you could go sign up for one at Gmail. Are you getting a notification every time someone types in the room, Rob? Oh, you need to disable that. Yeah, that would be overwhelming. Let's see if we can find it. I've never looked, but let's see. Bum, 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 bum. User settings. Let's go to notifications. So I would disable. Yeah, I imagine that would be. I would disable desktop notifications. I do like this because I teach, so I do want to see when I have unread messages. Yeah, this is on Discord. So what you're going to do is you're going to go to here. You're going to go down here to your name and click on the little user settings wheel. And then you're going to go to notifications. And you can disable all notification sounds, right? I don't want to hear any of that. Who needs that? I don't need sounds. Oh, there's a lot of them. Email notifications. So what you need to do, Rob, is turn off the notifications, turn off the social emails, turn off all of them. Even that. So under email notifications, make sure that they're all turned off. You do, Jonathan, you have to load a template in the new chart. That was that thing that I said do and you gave me a why, silly. So Rob, yeah, from user settings, and it's down at the very bottom. There's email notifications. Let's turn all those off. And then that should clear you up. That should keep you from getting bombarded like that. That's all right, man. I was too for the longest time. I'm not a very techie guy, Jonathan. But just having worked with the software and the repetition and stuff, I've gotten better over time, and my brother's taught me a lot. And you'll do all these things over and over, and eventually they'll become second nature. But until they do, it's always cool to ask. It's always okay to ask. Rob, you have to scroll to the bottom of it. When you open it, you have to go here, left side. First, you have to go to notifications. Under app settings, click on notifications. And then once you click on notifications, then you go to the bottom and you have those email notifications. So you got to go to little subset first. And I'm going to shut down YouTube, guys. Thank you.